So welcome everyone. My name is Matthias Knapp. I'm the founder of Opalesk, a niche media company focusing on alternative investments. Welcome to today's webinar with the Bahamas Securities Commission, where the Commission presents their framework for digital assets regulation. The session will be moderated by Sam Campbell. He is Assistant Manager of the Securities Commission. You'll meet him in a second. And we will also hear a statement of Honorable Justice Neville Adderley. He is the Chairman of the Securities Commission of the Bahamas. And we'll also have, of course, the Executive Director, Christina Rolle, of the Bahamas Securities Commission. So this is an interactive session. Welcome everyone again. I know we have a lot of people dialing in from all kinds of places, 500 people registered, so a warm welcome to you. Please remember, this is an interactive session. We are basically doing this for you, and we want to make sure you have all your questions answered. So remember, there is a chat button that you see on the right, private message, and I will post the question for you. So if you want to ask a question anonymously, send it to me as a private message, and I will then post it for you. So I'll disappear. Over to Sam.
Thank you, Matthias. Ladies and gentlemen, good morning and welcome. My name is Samuel Campbell, and I am delighted to be your moderator for this morning's Opalesk interactive session on digital assets regulation with Christina Rolle, Executive Director of the Securities Commission of the Bahamas. We are pleased to begin with brief opening remarks from the Chairman of the Board of the Securities Commission of the Bahamas, the Honorable Justice K. Neville Adderley, retired. And so without further ado, we welcome Justice Adderley as he brings his remarks.
This is the very first webinar after my appointment by the Honorable Prime Minister as Chairman of the Board of the Securities Commission of the Bahamas and of its new members. It is therefore an appropriate time that as Chairman, I briefly inform our stakeholders, investors, and potential investors of our planned mode of operation going forward. As you may know, the Securities Commission has been designated by law as the regulator for and is responsible for implementing the policy of 6 important acts governing financial services, along with its sister regulators, the Central Bank of the Bahamas and the Insurance Commission of the Bahamas. 2 of the acts, the Digital Assets and Registered Exchanges DARE Act and the Carbon Credit Trading Act 2022, are brand new, with the latter passed in Parliament within the last few months. They all lay the foundation for diversification of our financial services industry, a goal which has been elusive, but which has measurable implications for the growth of our economy and jobs and careers for Bahamians. Under each of the acts, the Commission has an ongoing commitment to educate consumers, investors, and licensees about the capital markets and the effect of the acts. Today, with the presentation of this Opalesk webinar, we see a seamless continuation of that policy as our Executive Director, Christina Rolle, makes herself available, as in the past, to discuss the Bahamas framework for digital assets business and what the Bahamas is doing to keep and enhance its position. Next week, October the 3rd to the 9th, the Commission will celebrate its 6th annual World Investor Week with IOSCO and securities regulators around the world. And so the Commission's effort at investor and consumer education will continue. The Commission is on the cusp of a major thrust to improve the ease of doing business in this space. Project Butterfly, which was announced on the 2nd of September by the Executive Director, plans to automate and modernize its supervisory processes, as well as the way it receives, handles, and applies data through its operations. This is no doubt welcome news for stakeholders. The Commission will also soon release its strategic plan to cover the period up to the end of 2024. This would include, among other things, improving and updating the legislative framework of the various securities laws, the DARE Act, and the rules under the Financial and Corporate Services Providers Act 2020, and the continued strengthening of the anti-money laundering, counter-financing of terrorism framework. We will also embrace technology, supervisory technology, so-called SupTech, as well as regulatory technology called RegTech, develop a position on decentralized financing, DeFi, and invite stakeholders to explore ways to accommodate our national applications of blockchain in the Bahamas, such as, for example, a land title registry system. Recently, as displayed on our website, Solidus Labs has ranked the Bahamas #1 on its global crypto regulation index group. This was out of 42 countries, including major players in the financial services industry. An overarching ingredient, which the ranking organization noted, was, and I quote, a positive environment set by government action and rhetoric to foster economic growth through a robust digital asset industry. This is clearly seen by the establishment of FTX in the Bahamas within the last year and more to come, and the enthusiasm with which the Prime Minister has been promoting the growth of the industry. By white papers, establishment of high-level policy and advisory committees, speeches at local and international fora, including the United Nations last week, and by the Attorney General and Minister of Finance, pushing a comprehensive and progressive regulatory regime, it has been made clear that the Bahamas welcomes digital assets and exchange trading businesses, including crypto assets and carbon credits trading. With this ongoing support, the Commission will exercise its powerful mandate to strive to keep the Bahamas best in class. Thank you.
Thank you, Justice Adderley. Now, before Ms. Rolle begins with her presentation, we would like to again emphasize that there will be a question and answer session at the end of her presentation. And I can tell right now, Ms. Rolle is very excited to hear from you. So now for the main event. Our Executive Director, Ms. Christina Rolle, will be sharing some very exciting updates and developments on the DARE regime, which regulates digital assets. Ms. Rolle?
Thank you, Sam, for the introduction, and a special thank you to the Commission's new chairman, retired Justice K. Neville Adderley, for his opening remarks. It is my pleasure to be here with you this morning to provide an overview of the regulatory framework for digital assets and digital asset businesses operating in or from within the Bahamas. Our webinar this morning occurs at a time of continued dynamism in the crypto asset space, marked by continued price volatility, news that cryptos may not be the inflation hedge some thought they would be, significant new regulatory and legal developments occurring in major jurisdictions, including the United States, celebrity supporters and detractors of cryptocurrencies continuing to opine about their virtues and vices, multi-million-dollar hacks, and ongoing questions about potential abuses by crypto service providers, among other things. In other words, it has been just another day in the office in the never boring, ever evolving area of digital assets regulation. Some of you would have joined the Commission for our DARE Act industry briefing on 31st March this year. There are a number of updates to share with you since that meeting. This morning audience includes persons with an interest in the space who may or may not be registrants or licensees of the Commission, as well as other stakeholders with a general interest in the regulation of digital assets. I thank you all for joining us. This morning, I will provide a brief overview of the development of the Digital Assets and Registered Exchanges Act 2020, or DARE, an overview of the Commission's role in the ongoing development of the digital asset space, some of the key features of the legislation, including provisions related to the Financial Action Task Force, or FATF's Recommendation 15, as well as the travel rule. I will also address how the Securities Commission continues to ensure we are properly resourced to regulate and oversee digital asset businesses and some of the more significant changes to the legal framework we are preparing to present for public consultation. As we get started, I think it is good to pause for a moment to consider how we are positioned now in terms of digital assets regulation. First, we have implemented a world-leading legislative framework for the regulation of digital asset businesses and the issuance, sale, and trade of digital assets. DARE has gained acclaim and enabled the Bahamas to attain the #1 world ranking on the Litis Labs' recent Global Crypto Index ranking for digital asset regulations that both protect consumers and encourage innovation. The jurisdiction has issued anti-money laundering, countering financing of terrorism, and countering financing of proliferation rules specific to digital asset businesses, which we believe capture the spirit and meet the technical requirements of the Financial Action Task Force's recommendations, including those specific to virtual asset service providers and the travel rule. The second largest cryptocurrency exchange in the world is registered in the Bahamas under the DARE Act. And there are other industry fintech leaders moving through the application process. And finally, you will find voices from the Bahamas present and leading on the global level at fora where thought leaders contemplate the direction of digital assets regulation. For example, the Securities Commission of the Bahamas is actively participating and contributing to the work of the International Organization of Securities Commissions, IOSCO, as it seeks to understand the regulatory risk this new sector poses and develop suitable global regulatory standards to mitigate them. With this position in mind, let's talk for a moment about how we got here and how we envision the legal and regulatory framework must now evolve. I will touch on some of the significant elements and milestones in the development of the DARE legislation in a moment. But first, I wish to provide an overview of how the Commission interacts with the government of the Bahamas and other stakeholders in the ongoing development of policy and legislation in this space. Legal clarity and effective regulation are critical to a well-functioning digital assets industry. However, attaining the appropriate legal framework that both embraces innovation and provides robust regulation require engagement with and support from the government policymakers, other financial regulators, the burgeoning digital assets industry itself, and consumers and investors. That said, none of the successes we have enjoyed in digital assets regulation would have been possible without the impetus of the government. The government of the Bahamas issued a policy white paper on 20th April 2022 entitled The Future of Digital Assets in the Bahamas, which outlines its policy objectives and rationale for wanting to regulate digital assets, its economic and other priorities, and elements of how the jurisdiction will develop and grow the industry. The policy paper, which is available on the government and the Securities Commission's websites, provides an overview of how digital assets policy is determined and developed. With such strong presence and direct engagement by the government, and considering the principle that good capital markets regulation requires some degree of independence by the regulator, I would like to spend a moment to discuss the role of the Securities Commission in advancing policy and making recommendations to the legislature. First, the government of the Bahamas has established the Digital Assets Policy Committee, or DPC, to ensure that the government's policy objectives are met and that all branches of the government are aligned and working to deliver the desired outcomes. The committee is chaired by the Prime Minister and includes the Bahamas' financial secretary, the governor of the central bank, and myself as the executive director of the Securities Commission of the Bahamas. It also includes the Attorney General as chair of the Digital Assets Advisory Panel. This panel is comprised of industry practitioners and leading experts and is charged with updating the government, the Digital Asset Policy Committee, and the regulator, and recommending appropriate changes to digital policies and initiatives, the DARE Act, and other legislation to ensure that the Bahamas remains a well-regulated digital asset jurisdiction and stays relevant and attractive for digital assets business to operate from, grow, and prosper. The Commission is positioned, therefore, to advise the government on the regulatory considerations necessary for digital assets industry development. Through the Commission's benchmarking and other research, and our involvement with various standard setters in the ongoing development of global regulatory standards, we are able to inform the policymaking process in terms of the regulatory way forward. This was clearly seen in the development of DARE and is still visible in the draft amendments, which we hope to issue for public consultation in short order. These were informed by the Commission's research and were developed under the Commission's regulatory philosophy and approach. Once the consultation process has been exhausted and any issues raised addressed to the best of our ability, the Commission recommends any new legislation or amendments to the lawmakers, with the government ultimately making the final decision on these national policy matters. Our primary objective in developing DARE was to bring regulatory certainty to a dynamic, fast-paced, and evolving space. To develop the legislation, the Securities Commission initially conducted a benchmarking exercise of 13 select jurisdictions, honing in on regulatory approaches, global standards, and best practices in the digital or virtual asset space. We reached out to other regulators with relevant experience and consulted with industry and other stakeholders to develop the legal framework. It was extremely important for the Commission that we address the Financial Action Task Force Recommendation 15 with respect to virtual assets in order for DARE to incorporate the highest international standards with respect to anti-money laundering and countering the financing of terrorism. The Commission started drafting what would become the DARE Bill during the last quarter of 2018. It was completed and issued for public consultation on 3rd of April 2019 and served as the foundation of the current DARE Act. The comments were compiled and reviewed and came to bear on the reworking of the legislation, which was laid before the House of Parliament. On 14 December 2020, the Digital Asset and Registered Exchanges Act was adopted. The Financial and Corporate Service Providers Act 2020 came into effect on the same day and introduced provisions for the registration of e-wallet service providers and digital asset custody service providers as licensed financial and corporate service providers. The DARE Act itself has already undergone a round of amendments, which was gazetted on the 20th of May this year. A key function of any effective legislative regime is the commitment to continue to amend to reflect the state of the industry. DARE provides key legal definitions for salient terms, including digital asset business, digital asset service provider, digital token, non-fungible token, utility token, and virtual currency token, among others. It intentionally does not set out to answer the question of whether a digital asset is a security or not. On a related note, you may be aware that the Central Bank of the Bahamas successfully introduced the world's first central bank digital currency. I note that digital fiat currency distributed by or approved for distribution by the Central Bank of the Bahamas is excluded and not subject to regulation under DARE. Non-fungible tokens and security tokens are also excluded or exempted from DARE. The digital assets or crypto space is still in its infancy, or in any event, far from its maturity. So it was clear to the Commission that we needed to establish a legislative framework that was not overly prescriptive. This allows us to be nimble and able to react to new risk trends or market development opportunities as the evolving landscape demands. An excellent example of this manifests with the Commission's approach to determining if a digital asset was a security or not. Through the Act, although various types of digital assets are clearly defined, and we are clear about what is in scope for regulation, digital assets or cryptos are recognized as its own asset class, and by giving the space its own regulatory regime, we have removed this narrow question and its inherent uncertainty of whether a crypto is a security, and provided a framework whereby digital assets can be addressed holistically. Pragmatism is a key consideration in our approach to regulation, and we continue to watch as trends indicate a move towards securities and other asset classes becoming tokenized. Allow me to very briefly touch on a few elements related to who may participate under DARE. The Act requires all persons carrying on or involved in digital asset businesses operating in or from the Bahamas to be registered or licensed. This includes natural persons, companies, partnerships, trusts, or any other legal entity. Note the founders, beneficial owners, security holders, directors, and officers of digital asset businesses must be identified pursuant to the Act. DARE requires registrants to maintain professional conduct, meet all financial requirements that may be prescribed, and comply with the Act. Examples of professional conduct requirements include duties to act honestly and fairly, to have effective corporate governance arrangements in place, to refrain from improper or illegal conduct, and to have effective mechanisms in place to protect client assets. Regarding financial requirements, after careful deliberation, and as we see how the space evolves, the Commission will prescribe these. For now, we ask that the directors of digital asset businesses consider the size and risk of the business and maintain adequate capital reflective of these conditions. I wish to highlight that as a feature of DARE, financial institutions already licensed or registered with the Commission may apply for registration of the additional digital asset business service they are contemplating. We anticipate this will ease the business process for current registrants and licensees. Finally, the activities of wallet service providers and custody of digital assets as licensable financial services are provided for in the Financial and Corporate Service Providers Act. These, of course, represent digital assets business opportunities for local as well as international entrepreneurs. Regarding the supervision and monitoring relative to virtual asset service providers, FATF standards set out various requirements regarding the supervisor's powers. The Act meets these, granting the Commission authority to suspend or revoke registration, enforce administrative penalties and disciplinary sanctions, and to conduct inspections and compel production of information. Regarding record keeping, FATF requires that all necessary records are kept on transactions for at least 5 years, and records on the KYC data collected through customer due diligence for at least 5 years after the end of the business relationship. The recommendations also call for virtual asset service providers to be subject to adequate regulation and supervision for AML-CFT. They must have policies and procedures around AML-CFT and compliance controls and systems. DARE meets these standards, requiring digital asset businesses to have systems in place to prevent, detect, and disclose money laundering, terrorist financing, and suspicious transactions in accordance with the prevailing AML-CFT-PF legislative suite in the Bahamas. For some time, the digital asset space had become a place with much attraction for criminal actors who are trying to hide their presence and activity with minimal or no regulation. In choosing whether to regulate the space or not, we determined that it was vital to demonstrate our full commitment to the global fight against money laundering, terrorist financing, and proliferation financing. The intricacies and challenges related to AML-CFT-PF in the decentralized digital asset space presented an opportunity to display the competence and excellence in AML and CFT regulation that exists in the Bahamas, which is supported by accomplished domestic human capital in the financial services and compliance space. As already mentioned, DARE was developed to take into account of the global AML CFT standards, in particular, Financial Action Task Force Recommendation 15 on new technologies. The recommendation involves the identification and assessment of risk related to new products and business practices and new and developing technologies. Under the recommendation, such risks must be assessed by financial institutions prior to launch of the product, service, technology, etc. And there must be proper management and mitigation plans and practices in place. At the country level, service providers must be regulated for AML, CFT compliance, and licensed or registered in accordance with FATF recommendations. The recommendation and its extensive explanatory notes were carefully examined to ensure the Act was in compliance. Related to this, DARE requires digital asset businesses to have systems in place to prevent, detect, and disclose money laundering, terrorist financing, and suspicious transactions, and subjects them to the requirements of the Proceeds of Crime Act 2018, the Anti-Terrorism Act 2019, and Financial Transactions Reporting Act 2018. Each of these acts was amended with the passage of DARE to include digital asset businesses as financial institutions. I just want to briefly touch on a few other AML-CFT related provisions. First of all, the term beneficial owner in DARE is assigned the same meaning as in the Proceeds of Crime Act, that is, a natural person who ultimately owns or controls a customer of the natural person, or on whose behalf a transaction is being conducted, or who exercises control over a legal person or legal arrangement. There is therefore no discrepancy in meaning between it and this key piece of AML-CFT legislation. In keeping with international standards and best practices, DARE also provides the Commission with cooperative power for the appropriate sharing of information with both domestic and international authorities. There are a few final areas I want to touch on briefly. The first is data protection. Data protection is a vitally important element of digital asset business. DARE addresses data protection by requiring registrants to meet the provisions of the Data Protection Privacy of Information Act for customers' personal data. Also, I want to point out that the Commission publishes the current list of licensed digital asset businesses, which is accessible for viewing on the Commission's website, www.scb.gov.bs. This is an important transparency feature which allows investors and the public to see the names and addresses of digital asset businesses registered with the Commission, the licenses or registrations held, including foreign licenses or registrations, the names of principals, directors, and other persons with management control, and any conditions imposed by the Commission. Digital asset businesses registered under DARE must comply with professional conduct requirements, including the duty to act fairly and honestly, to act with due skill, care, and diligence, to have effective arrangements in place for the protection of client assets, and to have effective corporate governance arrangements consistent with guidelines issued by the Commission, amongst other things. Importantly, DARE provides the Commission with appropriate administrative authority to punish and deter misconduct, including powers to ban registrants, suspend managers, and remove directors, officers, and other senior managers or general partners. The Commission has also taken a number of steps to ensure that it has the requisite capacity to provide robust, pragmatic regulation in keeping with our regulatory philosophy. Among our efforts to ensure adequate capacity is the Commission's FinTech Hub and our involvement in the Global Capital Markets Regulation Standard Setter, IOSCO. The Commission's FinTech Hub SCB FitLink, launched in the last quarter of 2019. Its establishment was an indicator of the importance we place on fintech innovation in the financial services industry and our understanding of the critical nature of engaging with the actors in and gaining an understanding of the practical aspects of the growing fintech space. SCB FitLink serves as the central point of contact for the Commission's engagement with the public on various issues related to fintech, such as virtual asset business, crowdfunding, distributed ledger technology, artificial intelligence, and initial token offerings. It aims to assist fintech innovators and incumbents with navigating the Commission's digital asset regulatory landscape, research, establish, and create policy rules and guidelines for fintech-related products and services, educate the Commission staff about emerging fintech trends, opportunities, and risks, and consult with domestic and overseas regulatory authorities regarding innovative technologies, amongst other things. FitLink is an excellent avenue to support a pragmatic regulatory framework, as it allows us to interact with potential regulatory addressees to learn about their challenges and how regulation is likely to impact their operations. FitLink has been an indispensable intrinsic element for both easing business for potential digital asset business licensees and as a means to inform our understanding of the industry. The Securities Commission also monitors various international standard setters to understand trending risks and regulatory developments. This is essential to remain in the vanguard of regulators around the world with a robust, internationally recognized compliant regulatory framework. The Commission sits on IOSCO's FinTech Task Force Steering Group, which is a board-level group established to develop standards for regulatory frameworks and regulators. This group is a forum where regulators share their challenges and experiences in all areas related to fintech, including digital assets, initial token offerings, and fintech regulation and solutions. The Commission is very engaged in the steering group's work streams and activities. The Commission is also a member of the Global Financial Innovation Network, or GFIN, which is an organization which was launched in January 2019 and currently consists of 57 members. The purpose of GFIN is to support financial innovation and protect investors and consumers on a global scale. The Commission became a member in January 2020 and participates on many of GFIN's work streams. The Commission is also a member of the Caribbean Group of Securities Regulators, or CGSR, FinTech Group. The group whose objective is to grow fintech and fintech regulation in the region consists of select Caribbean countries and capital markets regulators. The final note on ensuring capacity I will touch on is that the Commission is researching various SupTech solutions to augment our capacity to monitor and oversee licensed digital asset businesses. We anticipate this will become increasingly critical as the number and complexity of digital asset business registrations expands. As I prepare to close, I will highlight some of the regulatory areas we are preparing to address or not in our next round of amendments to the DARE Act. The collapse of Terra USD earlier this year highlighted some of the serious regulatory concerns around stablecoins, particularly algorithmic stablecoins that may be backed by other digital assets. The Commission is looking to amend DARE to provide a clear and concise definition for stablecoins, reflecting the requirement that stablecoins must be fully backed by assets, including fiat currencies, commodities, or other financial instruments. We will create disclosure requirements bespoke to stablecoins. The requirement should be in addition to the general requirements of disclosure for token issuances and include obligation for issuers of stablecoins to include in the offering document details on the operation and mechanics of the stablecoin. We will require disclosures around the standards and processes applied to the redemption of stablecoins and require ongoing reporting to the Commission as appropriate. The Commission is also looking to ensure that issuers of stablecoins should be subject to financial reporting, including quarterly financial reports and annual audit requirements. Proposed amendments relating to non-fungible tokens under DAIA will aim to clarify that the NFT exemption in DAIA applies only to NFTs that are considered a consumer asset and not to NFTs operating as financial assets used to facilitate capital markets activities. We provide that NFTs operating as financial assets are subject to the regulatory regime established in DAIA for all tokens and provide guidance on the assessment of the distinction between a consumer asset and a financial asset based on the characteristics, use, and manner in which an NFT is offered and sold or resold, and the structure and rights attached to the NFT. We are also looking to amend DAIA to address staking. To be more specific, we are looking to ensure that DAIA establishes a disclosure regime for platforms that use client assets for the purpose of staking, with disclosure requirements for details around the staking protocols to be made to relevant parties. The proposed amendments will establish a supervisory framework for derivatives of crypto assets. It will clearly define its scope to avoid any overlap with the regulation of securities or commodities derivative products, and clearly establish the jurisdiction of DAIA over crypto-related derivatives. Finally, the Commission has considered the area of DeFi, including decentralized autonomous organizations, and determined that the Commission would not address this area at this time. We recognize that there may be occasion to refer to DeFi in a legal or regulatory context, and as such may determine to still provide a definition in future amendments. Ladies and gentlemen, that brings us to the end of today's presentation. Before we move to the question and answer session, there are two final items which I want to bring to your attention. The first is the understanding that there needs to be greater general and advanced knowledge and competence with regard to financial technology in the Bahamas to support the talent base necessary to be the industry leaders, innovators, entrepreneurs, coders, analysts, regulators, support staff. To further this endeavor, the Commission intends to collaborate with the University of the Bahamas on 3 8-week courses focused on the digital asset sector. These courses will serve as professional continuing education courses and will provide the foundational knowledge needed to work with digital asset business and fintech and to understand the Bahamas' digital asset regulatory framework. We anticipate attendees will earn a certificate upon successful completion of the course, which can be used to demonstrate to the Commission that the individual possesses the requisite education and knowledge to engage in registrable activities in the Bahamas. Finally, we are very excited to invite you to join us in the Bahamas towards the end of January 2023 for what we are sure will be the best fintech related festival in the region. You can leave the bleak midwinter behind and join us for D3 Bahamas, the digital decentralized disruptive event for fintech and Web3 leaders. Be sure to check out the website www.d3bahamas.com or the D3 Bahamas social media sites. We sincerely hope to see as many of you as can join us at the Atlantis Resort for what we are planning to be a remarkable and truly unique fintech festival experience with a special focus for fintech entrepreneurs. With that said, I thank you for listening and revert back to Sam for the question and answer session.
Thank you, Ms. Rolle, for those very illuminating updates. We said this was going to be an interactive webinar, so we'll now open it up for the Q&A session. We have a couple of questions that already came through in the chat and the Q&A box. So again, please don't hesitate to ask your questions, or you can send them privately to Matthias. All questions are welcome. Now, for our first question. Mr. Rolle, earlier you mentioned the magic word capital adequacy that certain players need to display. Would you be able to share more information about what the parameters are here?
So I think so one of the things that we recognize about this space is that a lot of the actors look different. So as opposed to in the securities space where one securities firm is very much similar to another, we see in this space that a lot of the firms, their business activity is different from each other. So we thought that at this point, it would probably be premature to prescribe regulatory capital in the way that we do in other arenas. And so the way we address regulatory requirements at this time, as opposed to prescribing them, is that we ask that they be addressed in the governance framework of the organization. That is, the directors periodically review the regulatory capital needs of the organization based on the risk, based on the size of the organization, based on the complexity of the business activity. Certainly, once the commission goes to examine an organization, the commission would review this process, review what has been applied, and we may make a determination that the organization really thought through the process in a very robust way that the commission would expect, or we might say that they may not. But at the moment, we leave it within the framework of corporate governance. I anticipate, though, that we will address this issue probably in a more prescriptive way, maybe even as early as next year.
Okay, thank you for that. Another question. Of course, you know, this is a very rapidly evolving space. How does the commission plan to keep its regulatory regime relevant and up to date?
So I think we plan to continue to do what we have been doing, which is, you know, we're continuously benchmarking what's going on in this space, not only on the regulatory side, but what is happening on the industry side. We're continuing to engage with industry players to see what their needs are, to see what the concerns are. We're also keeping track of all of the standard setting trends. And so I think we have in place a continuous process for doing this, a continuous process for engaging with stakeholders. And certainly I think our size enables us to be nimble in a way that larger jurisdictions cannot be. I mean, so if you take this issue of what is a crypto, you know, the Bahamas has been able to bypass a lot of regulatory hurdles by crafting its own legislation for the crypto space on its own. And so that nimbleness, that ability to engage directly with policymakers, that ability for the industry to access government policymakers, I think that is a very big advantage that we have. The quickness with which we can bring legislation, I think the thoroughness with which we are also able to consider it is an advantage. Certainly also, I'd be remiss if I don't mention that the Bahamas has a cadre of well-seasoned professionals in financial services. And I think that while the digital asset space is new, a lot of the financial service professionals in this space, particularly compliance professionals, have been able to pivot into this space, and I see that the fact that we had a deep bench in financial services perhaps will serve as well.
Yeah, very, very great points. Matthias, would you like to ask some questions that you see coming in from the chat?
Yeah, there are indeed a lot of questions coming in, starting with one that probably Christina can answer very quickly. Would managing digital assets fall under the scope of the DARE Act?
Okay, so that's an interesting question, because I think what the person who posed that question is thinking of is in the way that the securities framework has a category of license called managing securities or managing investments. So currently, we don't have that category of license under DARE.
or how significant a local presence is required to be maintained for exchange licenses under there?
So we prefer a physical presence. We have not mandated one, but we prefer it. And in any event, we do have minimum physical presence requirements for all exchanges. So even if the exchange isn't going to have a full physical presence, they will have to have a minimum physical presence requirement.
Then here, if a service provider wraps the sand dollar, right, which is your digital version of the Bahamas dollar, if the service provider wraps the sand dollar with a token protocol, moving it on-chain, what regulatory jurisdiction would it fall under, given that it's digital fiat but with crypto characteristics?
So I know that there's a temptation to ask these very, very technical questions. I think that those types of questions with respect to structuring is best suited to discuss with a legal advisor. And I would prefer not to address it in this forum. Or another option would be to send that type of question in to SCB FitLink, and then we can address it there.
Right. Then when is the course at University of Bahamas available?
So we anticipate it will be available early next year. We are just in the beginning phases of developing those courses, but we anticipate that they will be available as early.
So I think the question is, what are your minimum requirements to be a digital exchange?
Of course, an exchange that is listing assets is expected to do some due diligence on those assets that they are listing. But in terms of outside of due diligence, the Commission does not prescribe any minimum requirements for the exchange.
Yeah, so these questions, they get to the nitty-gritty. Here's another interesting one. While a stablecoin framework is still not in place, should eventual stablecoin issuance within the DARE be treated as an asset-backed token, then in bracket for the stablecoins that have this business model? Should eventual stablecoin issuance within DARE be treated as an asset-backed token?
I wouldn't characterize that a stablecoin framework is not in place. When the Commission developed DARE, that was in 2018. Of course, we saw stablecoins on the horizon. We didn't think that there was enough of information in the space on how they worked at that time to flesh out a framework, and so we sort of thought that it would fall in that broader category of an asset-backed token. Since that time, and certainly since a lot of what has been happening in 2021, 2022, enough of a framework and enough authority to address any stablecoin that wants to be registered in the jurisdiction at this time.
Right. So, yes, here is a question on how many businesses have been formed under the DARE Act, and along with that also, what is appropriately the time for approval, assuming a clean application and a quick response to all inquiries. I recognize the timeline will vary based on the business, but looking to understand if this is 60 days or 6 months.
So in terms of the registrants under DARE, I'll just direct you to the Commission's website where you can find that information. I don't think it would be fair for me to give you details about non-public information, and non-public information would include licensees that we may have approved in principle, or other players and that we may have given a non-objection to. So I don't think it would be fair for me to give you that non-public information, but you can refer to the Commission website for the public information. In terms of the application timeline, what we say to any prospect is that you can come to the Commission. What we suggest is that you set up an initial meeting that can take us through your business. We've found that certainly helps in going through an application, going through some of the things that you ought to consider that the commission is likely to require before the application is submitted. Once the application is submitted, it is very rare that an application is submitted in a very complete state. So there is some back and forth with the commission to address deficiencies or to address questions that the commission may have. Once we have that application in what we consider to be a very expected to launch at the end of October, and it will launch with an application process built in. The licensee or the applicant, the potential licensee, will be able to track at all phases of the commission's process just where the application stands. You'll be able to see whether it's being reviewed by supervision, whether there are deficiencies that you need to address, whether it's gone up to my level for an approval, and you'll be able to get a very good picture of the timeline it's taking. But we would say that about 30 days from a complete application. Now, that said, we also offer applicants, because we know that there are practicalities while they're going through the application process, particularly those that need to establish a physical presence in the Bahamas. We also offer that they can apply to the commission for an approval in principle. Now, the approval in principle does not allow them to operate, but allows them to move through other aspects of their operations, like establishing a bank account, entering into a lease, and other things that they would need to do in order to operate eventually.
Yeah, very interesting. So, Christina, some praise for you. Christina, great presentation. I think we all agree. So, thank you for that. I think the SCB has done a great work in regards to DARE. You mentioned the ability of
and establishing a physical presence. They're not establishing just a brass plate. They have substantive operations in the Bahamas, and I think that would be well in line with the OECD's and the EU standards with respect to BEPS and other things.
Right.
Mr. Rolle, regarding, so one more question came in, regarding the upcoming amendments to the DARE Act, would you be able to share more insight on the expected published date for release for consultation, and shed more light as to why DeFi organizations are not being given attention at this time?
Okay, so the issuance of the public consultation, I'm anticipating that will happen sometime towards the end of October. Where we currently are now, we expect actually to finalize our drafting instructions sometime today, and we expect to go through the drafting process over the next three to 4 weeks. And I would say sometimes toward the end of October, we would have a draft that we can issue to the public. With respect to decentralized autonomous organizations, because I think that is what the question is specifically getting at, the commission considered this point, and we have considered that there may be some scenarios where we would find it acceptable to have this activity within the jurisdiction. I don't want to say too much about that, but there are some scenarios where we think it may be acceptable to have those types of organizations. At the moment, we think that the exposure to reputational damage is extremely high, and we would have to carefully think through that scenario. Now, we may think through the scenario in time to meet our drafting at the end of October, but at this moment, I don't anticipate it.
Okay, and you mentioned the big D3 Bahamas event coming up in end of January. The question asks, who can attend the event?
So anyone can attend. There will be a fee for attendance. I think the fee, I don't, well, let me not speak out of turn because I'm going to get in trouble, but there will be a fee for attendance, and those will be published shortly.
Okay, and another question, what is the process for scheduling a meeting with the SCB?
So I think the process is you just call. You can ask if you want to have a meeting with me. You can ask to speak with my assistant, LaDonna Hudson. You can speak with Sam Campbell, both of whom are very able to get things on my schedule. But I think it's very easy to schedule a meeting with the commission. We're very accessible.
Matthias, one last question before we wrap up?
There was one coming in. Would be interesting to see how DeFi and DAOs, right, decentralized autonomous organizations, are approached within the whole regulatory regime.
That the regulator would be interested in is how we can determine who are behind the transactions, how we can monitor transactions effectively, how we can avoid market misconduct with respect to those transactions. And I mean, there perhaps, I remember earlier in these conversations with respect to DeFi, there were conversations about whether a regulator would become a node on the network. I mean, I don't see those things as being very practical. I mean, I don't know where those conversations are likely to go, but I don't see those things as being very practical in the long run. But I think DeFi is certainly interesting. My suspicion really is that while crypto and crypto enthusiasts have a dream of being totally off the grid, they will at some point have to have some intermediation if they want to maintain anonymity. I mean, there will have to be someone somewhere in the process who will have to know who various players are. That's just my suspicion wearing a regulatory hat.
Right, so we are about to end. So we ran for 1 hour, 60 minutes. So this is what people have basically planned for this webinar. I really want to thank you all from the Bahamas Security Commissions, including the chairman who spoke to us at the beginning, really to make time. We have had people from over 40 countries at this webinar, including China. So there is a lot of interest from all places. And thank you again, Christina and Sam. And please call the security commissions for any questions. We will email you tomorrow the link for the replay. You will also receive the presentation attached to the email, so please watch out. We welcome you back to the Opalesk webinar. I hope we'll do this again with Christina next year to give the world an update what the Bahamas has achieved the last 12 months. And so that would be it from my side. Christina, a final word.